Alright, so see, testing. Alright, where am I? Alright, so next chapter, how to trade ranges. Alright. Alright, how often you get into periods of narrow ranges of 3 to 5 points. These are times of discouragement for most people who are in the wrong side or who are looking for big profits. Where ranges only give you small profits, you can derive profit from 3 to 5 point moves. He's just going to tell you to trade the range. Okay. Now, why is that important, right? Well, it's important because a lot of times when we trade, you just put on positions based on some indication. And here he's saying, hold on, check the trend. If it's a range-bound trend, trade support and resistance. That's what he's saying here. Now, there's going to be some details regarding that. So keep a vertical chart of the daily chart of the well-known averages. So just take a look at the SPY or the ES and have a daily chart. Use these to indicate when the market is in a trading range or whether it's moving to another level. It's very simple. Like you would know it's flat, or if it keeps on making new highs on the rallies, it was going up or down. Right? So you do not care which way it goes or when, but you need these averages for a broad picture of the market as an indication of various currents and eddies. The currents are the small, intermediate, or long trends. The eddies are the trading areas. Alright? So basically, the currents are the small, intermediate, or long trends. It's just different time frames. And the eddies are trading ranges. In streams, these are the worlds of the quiet water. I mean, he's just giving examples, so just metaphors about trends and a lower time frame. It's in ranges. Your vertical line chart of these averages should also show the volume of the day's trading. So you got to use the volume. This is very important because if forming your judgment of the prevailing trend, your individual stock should also show the value of the day's. So basically using a daily chart with volume. Alright, now why? So that you may observe whether this volume is increasing or decreasing on the advance and the decline. It's very important. One of the ways you use volume is just by taking a look as whether it's increasing or decreasing. Typically, I mean, when it's liquidation, then you see it increase. Like, let's say there's a rally down, so in the short side, you want to see the volume increase. But typically, I mean, just think of it this way: if you got a price of stock is 30, and let's say you have a million quantities, million volumes, million whatever, then when it goes 31 or 32, it should be less, right? Because it's a higher price. So as price increases, demand decreases. That's typical behavior. As price increases, demand should decrease. But there are times when you go 30, there's a lot. 31, there's more. 32, there's even more. That's like a different type of behavior. And extremely bullish behavior. Anyway, where was I? Volume of the day's range, blah, blah, blah. Yeah, so that you may observe whether this volume increase, decrease. So, I mean, the point here is to observe the volume behaviors on the rallies versus the pullbacks. That's all. Rally should have more volume, pullback should have less. Increases serve to emphasize the bullishness or bearishness. He's mentioned this a couple of times. Everybody knows this, but not but not the way it's done. It's just, I don't know. It's easy to say, but when you're doing it, very few people do it, and they keep going to MACD indicator. So I don't know why. Decreases warn you of a probable reversal in direction. You see this? Decreases in volume warn you of a probable reversal in direction. You can see this in the wave chart also. Like you have what you see is, let's say you have a trend, right? The first rally has a lot of volume. The second rally starts having less volume. Third, even lower. The fourth rally, even lower. The fifth rally, even lower. So what's that mean? That means it's going to be a trend reversal. Just like bars, let's say you have price going up, for example. The first bar has a lot of volume. Second bar, little less. Third bar, little less. Fourth bar, little less. Fifth bar, two things usually happen. It's a little less and there's a reversal, or it's a little less and there's the next bar is a climax, then a reversal. So this is like some things to look at. Other things you can combine with this is shortening of the thrust. You can also combine with the net progress, gain or loss, which is just taking a look at the close to close progress. Anyway, I could elaborate on this and write a book, in fact, but there it is in a nutshell. Do not let its brevity disguise its value. It's like a little thing here, and it's extremely important. Decreases warn you of a probable reversal in direction. Okay, very important. Increases serve to emphasize the bullishness or bearishness. So when you look at volume, what are you going to do? What you're going to do is observe the advances and declines. If the volume is increasing, then that direction is likely to continue. If it's decreasing, it warns you of a probable reversal in direction, meaning that get ready for the direction to turn. This is not only the case with rallies, and wave volume, it's also the case with bars and volume. Okay? This is really important to understand this, and it also, if you think about it, not just like with common sense, you'll see that it makes sense. Because if you have a price at 30, you have a million traded. 31, you have 800,000 traded. 32, you have 500, and you keep on going to 36, and then eventually it goes to 100,000, because people eventually get tired of buying at higher prices. Would you keep buying at higher prices and it keeps on going higher? Would you continue to buy higher prices? No, you'd wait for a pullback. Or so if the prices are going high and the volume is increasing, it's emphasizing the bullishness. If the prices are going higher but the volume is decreasing, it's telling you watch out for a reversal in direction. There's another way of looking at this, in my opinion. There's certain turning points that occur on low volume, and there's certain turning points that occur on high volume. So you have to understand the low volume is similar to this type of understanding, meaning there's just a lack of demand as prices increasing on the advances. And the other one with high volume is just a climax, meaning supply, a hell of a lot of supply came in at a nice price. When you see the averages working back and forth over a trading area, you will generally find your individual stocks doing the same. Not always. All stocks do not move alike, as you know. For averages, will be in a zone, and stock may have small, medium, or wide swings without affecting these. Your stocks may not be included in the averages. Whether it is or not, remember you are trading your stock and not the averages. The lower boundaries, upper and lower boundaries of these swings represent the points where supply overcame demand and demand overcame supply. What's he saying? The pivot at the top and the bottom, which you call support and resistance, meaning the area where the price reversed. So obviously, what is resistance? Resistance, when it goes there and it comes back down, it means supply overtook demand. That's why it's coming back down. When it goes to support, there's a reversal. Why? Because demand overtakes supply. That's all he's saying. This seems a simple thing, but very few can do it. Alright, so what's he talking about? Your purchases should be made around the bottom of these short swings. Around the bottom. Alright? And your long sales around the tops. Alright. So upper and lower boundaries of these trading swings represent the points where supply overcame demand and demand overcame supply. Blah, 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 blah. Here's an important thing that he says. Alright. Your purchases should be made at around the bottoms and around the tops, obviously near support and resistance. It doesn't have to be a spring or upthrust. It could be a test, because the test is around it. This seems a simple thing, but very few people can do it. That's because they don't have the proper instruction, or they have not studied and practiced it. We will show you how to do this according to our tape reading chart. Alright, now I might go over it. You guys are going to be in a real fucking treat if I do. But it's like a little bit exhausting. The most perfect method that, as far as we know, has ever been devised for those who trade from the tape in an office or on the floor of the stock exchange. If one is a member of the exchange, it's a blah, blah. I mean, I don't know what he's saying over here about member of exchange, but the point is, you gotta use a tape reading chart. That's really it. Meanwhile, consider the position of a single stock within its movement plotted on the wave chart and in connection with its location in its trading area. If it is swinging back between 30, and here's just an example, if it's going back between 30 and 35, you should give immediate attention to its buying opportunities as it approaches 30 and its selling as it's near 35. This does not seem that you are to buy or sell near these points. I mean, don't just buy it, which is another important point. If you have 30 and 35, a stock is range bound. When it goes to 30, don't just buy it like, oh, that's support. Oh, that's 35 is resistance. You don't know if it's going to go through. Alright? But that you are to watch out for chance for profit indicated by the action of a stock on the wave chart and on the tape reading chart referred to above. You never know when the stock approaches the upper or lower levels of a trading range whether this time it will go on through. So you do not take a position until you have the facts assembled. Alright, now all he's saying is when it's at support and resistance within a trading range. Let me just sum up everything. Yeah. So this whole little chapter is about trading ranges and how to trade them. So the idea, if it's going from 30 to 35, pay attention when it goes down near 30. It doesn't mean it has to be exactly 30. It could be a 31. Alright, and 35, it doesn't mean you have to wait exactly at 35. It could be around 34. Because sometimes they won't break through. So when it goes around that area, wake up. Alright, now when it's around that area, what are you supposed to do? You are going to do a couple of things, or supposed to do a couple of things. The first is watch the rally advance as it goes to these areas and watch the volume. If the volume of the bars is decreasing, that's not a good sign that it's going to break through. Like, let's say you have a resistance at 35 and price is going to 35. You know, it's a wave going up to 35 and you see bar, 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 and the volume decrease, 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 decrease. It's telling you there's going to be a reversal. So that's the whole point of this chapter. When you trying to trade support and resistance, look at the volume of the bars as they approach support and resistance and see if it's declining. That's the major point that he's trying to make here. And what else? That's the major point right here. And the second is use a tape reading chart with the wave chart. You could just use the wave chart, right? I don't see why you can't. But his point is use the tape reading chart with the wave chart. And you see it's clear. If it's swinging between 30 and 35, you should give immediate attention to its buying opportunities as it approaches 30. So what are you looking for? Price is going to 30, volume is decreasing. And it's if it's at 35 and you want to short it, as it's going 35, what are you going to be looking for? You're going to be looking for that volume to decrease as it's going to resistance of 35. And it does not mean you're gonna sell at 35 and buy at 30 automatically. You're gonna watch the volume instead, see if it's decreasing. All right. And when it goes there, you don't know if it's gonna go through or not. So what do? You take a look at your wave chart and the tape reading chart. Now, say, what is the tape reading chart? Tape reading chart it's like an order flow chart, but he used a 1/8 point and figure, and that 1/8 point and figure will have the volume in it. That's all. So for each point, like, you'd have 1/8 of a point, then the second eighth of a point, the third eighth of a point, and in that box is going to be the volume that's traded at that price. Alright. Any top or bottom is a small turning point, and even a small one may develop into a more important one. So that's how he's trading ranges. He's looking for volume decreasing at resistance as price goes to resistance, and then watching the tape reading chart along with his wave chart. So I'll see how much of this I want to do, because it's a little bit complicated, especially his tape reading chart, and his explanations are not that great. And also, like, you need some type of order flow chart, so that can be constructed. Alright, so what's the next one? Ding, 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 ding. You see this rally right here? This rally prior to the breakout? I bet this rally here, this green bar, green bar, green bar, would have had increase in volume as it's going to resistance. And then this right here, this pullback, would have either decreasing volume, or one of these bars would have had a lot of effort. A lot of effort. It would have been one of these bars or the reversal right here. So I don't have the volume here, so I can't test, but that's what have happened. And typically this bar right here, right there, or maybe here, it would start having low volume. Low volume, low volume. Somewhere around here to be testing, like goes down, tests again, goes down. And even this chart, you could see like one green bar up and then takes 3 inside bars. I heard someone refer to this as the angel's wing. So it's like this is the angel and that's his wing. But this kind of pattern, or whatever you want to call it, is it really is explosive. When it does that, it forms the angel or bar. It goes down like that. It takes 1, 2, 3, and they don't break out below, and then they reverse. It's usually explosive. Oh shit! There we go. Tape reading chart. This is so annoying. Alright, I'll cover this some other time. Thanks. Bye.